Hello, we're Group 2, and today we'll be making the case for why a progressive tax system is the fairest and most effective way to structure taxation. To understand why this matters, let's start with a simple question. Imagine two people. One is a billionaire CEO and the other a grocery store cashier. If both pay the same percentage in taxes, who feels the impact? The billionaire might have to cut back on luxury spending. The cashier, they might struggle to afford rent or groceries. That doesn't seem fair, does it? Yet that is exactly what would happen under a flat tax. It treats all income as if it were equal, ignoring the fact that losing 20% of your income means something completely different if you're making $40,000 versus $4 million. Today, we'll be discussing three different types of tax structures. First is flat tax, and that involves everyone paying the same percentage regardless of their income. It sounds fair in theory, but in practice, disproportionately impacts lower income individuals. Next, we'll be talking about regressive tax, and that's a system where lower income individuals actually pay a higher percentage of their income. And this often happens with, for example, sales taxes because they don't or aren't adjusted based on income level. Then lastly, we have progressive tax, and that's where higher earning individuals pay a higher percentage in taxes. This is the exact example that we've effectively implemented in the United States at both federal level as well as the state level in many different states across the country. So in this presentation, we're going to prove that progressive tax is the fairest, the most economically beneficial, and the best way to create opportunity and long-term stability. By the end, we'll see why it's not only the right choice, but frankly, the only logical choice. Throughout this presentation, we've demonstrated why a progressive tax system isn't just a good idea, it's the fairest and most effective way to structure taxation. We've showed that progressive taxation strengthens economic growth by funding essential public services while ensuring that those who can contribute more are able to do so without harming lower income earners.
Okay, now I'm going to get right into the case for progressive tax. So, the main things that we decided that separates the progressive tax system from the others are the economic growth and stability, the reducing income inequality and promoting social mobility, and the fairness and global evidence provided. All right, so first thing I want to talk about is the influence to work brought by this system. So the influence to work between high earners and low earners in the system is very different. So first, the influence for high earners. So high earners are less motivated by this system because of the higher tax rate they pay on their extra income. Their motivation to work may be lowered by the fact that they can move into a higher tax bracket and pay more tax on the money they made with their extra work. On the other hand, low earners kind of have this opposite motivation. So lower earners are very motivated by this tax system because of the benefits they receive. Many progressive tax systems include benefits like tax credits for childcare or education expenses for low-income workers, giving them more motivation to be part of this working class and receive these benefits and the lower tax that they receive from the system. Okay. Another important aspect of this system is the wealth allocation. So the progressive income tax gives high earners incentives to gain wealth through capital gains rather than labor income. So this is because in this system, when they gain money from capital gains like investments, businesses, or stock shares, it's not taxed at a progressive system the way that their labor income is. So they pay the same tax as anybody else would on that, compared to the high tax they would pay on their labor income. So, yeah, labor income is highly taxed for these individuals, while income from investment is taxed at a much lower rate, making it easier to make money through capital gains. This wealth allocation is extremely helpful for the government because investments help businesses flourish and foster innovation. And this really boosts the economy because with people putting their money back into capital gains and investment, it gets the money circulating and really grows the economy as opposed to people just working day by day and making their money through labor. Okay, another important aspect brought by this system is the wealth distribution. So compared to every other system, this is the best one for bringing in wealth distribution because of the differences in tax rates between the higher earners and the lower. So high income earners are taxed at a higher rate, and this it makes it possible for low income earners to pay less money and be able to retain more of what they earn. Low income earners pay less and are still able to benefit from government social programs that are funded by the taxpayers. And a lot of this tax, as said before, comes from the higher income earners. So they are able to really greatly benefit from the system. All right. And here is kind of the effect on the labor supply model through the progressive tax system. So the income effect shows that in a higher tax bracket, people need to work more to keep up their standard of living. So this is going to raise the labor supply because people are taxed higher, so they need to work more in order to keep up their high standard of living that they got with their high income. On the other hand, substitution effects show that higher taxes make leisure cheaper compared to work because when you're working, you're not earning as much, especially for high income earners. So this might make people work less. So the income effect and substitution effect kind of differ here. But overall, in the labor supply model, there's a big difference between this effect on the low income workers and the high income workers. So, for example, the low income workers, utility is more impacted by a high amount of working hours at a low tax. So they're going to want to work more because they're paying less and earning more. But again, you see the opposite for the high income workers as they are earning less because of their high tax. And the empirical studies for this model have kind of shown a lot of different things, and it's shown mixed results. All right, now I'm going to go over some examples to kind of put this into more realistic terms. So, Germany and Canada are two countries that have very strong progressive tax system, and they use higher marginal tax rates to fund universal healthcare and infrastructure. And this helps lead to a long-term economic stability. And this kind of shows to the fairness that we were talking about before to be able to help the lower income earners really just have a better standard of living. Also, Japan uses progressive taxation to maintain relatively low levels of income inequality compared to other major economies, preventing the kind of wealth gap seen in countries with flatter tax structures. So again, just showing that this is very helpful for low income earners to be able to, really just also have a good quality of life while not having too much of an impact on high earners. And it really just lowers the wealth gap and makes it everyone being able to be successful and healthy. Finally, this is kind of a story example. So because high earners have greater financial flexibility, they are able to contribute more without impacting their quality of life. So a billionaire can afford to pay higher taxes and miss some luxuries compared to a single mother fighting to keep food on the table. So basically what I want to convey through this is that, if a billionaire is paying a higher tax rate, the things that they are going to lose don't compare anything to, a lower income earner who could possibly be a single mother who maybe they're paying a higher tax and can't even feed their children or keep a roof over their heads. So this system really is just beneficial to help things like that from happening. And maybe, the higher income earners have to pay a little bit more just to make sure that everybody can have a high standard of living.
We briefly discussed what a regressive tax system is, and I'm going to be telling you why it is not a very useful one. So a regressive tax system is one where the tax rate decreases as income increases, meaning that lower income individuals are paying a higher percentage of their income in taxes compared to higher income individuals. And I'm going to be telling you some of the effects of this. So first, regressive taxes worsen income inequality. In a regressive system, low-income workers pay a larger percentage of their earnings in taxes than higher-income individuals do. And over time, this widens the wealth gap since lower-income households struggle to save and invest their money. Meanwhile, the wealthier groups spend a smaller proportion of their income on taxes and have less of a burden. This system also makes economic mobility significantly more challenging, as low-income individuals would have lots of trouble getting out of their high tax rate tax bracket. Second, we have how this system hurts economic growth. So lower income households tend to spend most of their earnings on essentials. When they are heavily taxed, they have less disposable income, reducing their consumer demand for other goods. When there's lower demands, businesses suffer, which leads to businesses having to lay off and other job losses and slower economic growth as a whole. So, in contrast, a progressive tax system would ensure that taxation does not excessively reduce the purchasing power of those who spend the most. Lastly, we have the shift of the burden towards the lower income group. So, high earners benefit the most because their wealth comes from capital gains, investments, and assets, which are going to be taxed at a lower rate than wages. And this creates an unfair system where the rich contribute less in taxes relative to their income than the low and middle income workers. And overall, a fair and effective tax system should support economic growth, reduce or limit inequality, and ensure that contributions made by each individual are aligning with affordability to some degree. And in this system, regressive income tax fails all of these criteria.
So now I'm going to speak to why we believe that a flat tax rate is not the appropriate choice. So there are three main points to this argument. The first being that it ignores the accumulation of wealth for individuals that are already wealthy. So for this, it does not distinguish between types of income, that being like passive income, such as investments in assets, versus active income, which we would consider these wages. So super wealthy individuals grow wealth through investments in assets, rather than direct wages like lower income earners. And these are passive methods and examples of passive methods that aid the wealthy in the end. So, for example, in a progressive tax system, these passive methods would typically be taxed higher. So here, the ultra wealthy are able to earn their income passively without being taxed at a higher rate. And the second point is that there are real world examples of it failing. So in countries such as Slovakia and Russia, they have tried to implement a flat tax system, but it's failed in the past. And specifically in the US, of the 41 states that earn revenue through income tax, only 12 of them use a flat tax system. And the last point is that there is no redistribution of wealth using a flat tax system. So low income earners face a larger burden than high income earners. So if we consider two individuals, the first earning 10,000 a year and the second earning 1 million, if they're both taxed at 25%, this leaves the first person with $7,500 and the second with $750,000. So the $2,500 of tax on the first individual has a much greater impact on their lifestyle. So low income earners already typically spend a larger portion of their wages on necessities. Thus, their disposable income is disproportionately affected compared to the rich. And that just, again, is in the magnitude of money that's left after the tax. And in addition, with a flat tax system, it can lead to a decrease in government revenue overall compared to a progressive tax system. So this leaves less money to support government social programs that affect these low income individuals that are already disproportionately affected by tax rates.
Throughout this presentation, we've demonstrated why a progressive tax system isn't just a good idea. It's the fairest and most effective way to structure taxation. We've shown that progressive taxation strengthens economic growth by funding essential public services, while also ensuring that those contribute more do so without harming lower income earners. We've highlighted how it prevents extreme wealth inequality and promotes upward mobility, unlike regressive and flat tax systems. And finally, we've proven this with real-world examples that show that progressive tax systems create stronger, more stable economies. The choice is clear. A tax system should not punish those who are already struggling while allowing the wealthiest to accumulate even more at the expense of everyone else. If we want a fairer economy, a stronger society, and a system that truly works for all, progressive tax isn't just the best option. It's the only one that makes sense. Thanks for listening.